Thank you everyone for sticking around for the afternoon. I always call this the graveyard shift, so it's always a risk to actually do an event session in the afternoon, so thank you very much. I think it's probably one of the most interesting topics that we're going to hear about this afternoon, mainly because it's the discussion the fintech community has regularly about disruption versus collaboration. So since we launched 2 years ago Innovate Finance, the narrative has really changed dramatically. We used to talk about startups really being the driving force of disruption in finance, and the startup community was doing all it could to undermine banks and financial institutions and creating services that are putting customers at the heart of their businesses. What we're finding now, 2 years on, everyone seems to come to agreement that actually we have financial institutions that are also innovating within their four walls, but also tapping into the fintech innovations that are around them to improve their own processes. So we're going to explore that topic in detail. Focus will be on payments, and we've got an interesting panel to share their insights. We have Rachel Bale, who is the VP of International Markets for MasterCard. Dr. Avtar Sarah, who's the CEO and founder of a new fintech company called Nuvora. And Chris Gledhill, CEO and founder of Seco. Thank you everyone for joining me here this afternoon. So I want to start really with you, Rachel, because MasterCard obviously is the most recognizable brand here on the panel. You're celebrating your 50 years anniversary. Now, looking now into the future, how are you going to stay innovative and ensure that you're not left behind as a result of these new fintech plays that are around you?
Yeah, so 50 years this year is our anniversary for MasterCard, and that's delivered for us great experience and reputation and brand, which we're very proud of. But equally, obviously we're not going to stand still. Our CEO has repositioned us in the last few years as a technology company within the payment space. And we pursue innovation in two ways, as you were alluding to, both in-house but also with partners as well. So in-house, the most obvious example we have of that is our labs unit. So we have 6 standalone labs around the world. We also have a 7th, which we run in conjunction with the Bill and Melinda Gates Foundation for Financial Inclusion. We find the labs model is great at driving our R&D, giving our teams maybe a bit more freedom to be more creative, perhaps take a few more risks in terms of how we're innovating. We do that in conjunction with clients. We do not only use those labs for R&D and prototypes, but we do commercialize some of the things that come out of the labs. So last year, for example, we launched the Quicker app with Wagamama here in the UK, which is a pay-at-table app, which sprung from labs development. But as well as in-house, we also partner across the full spectrum. So we do partner with startups. We've got an incubator program called StartPath, where we scan the globe for the best startups in fintech out there. And really agree with the comments from this morning about some of the great technologies coming out of Tel Aviv, India, Singapore. We've got some great examples of that within the StartPath program at the moment. We also, as well as that, which is more of a mentoring program, we do invest in startups. We have a partner called Masabi, the UK company who has an end-to-end mobile ticketing service, and we've invested in them, and we've been working with them launching that service around the world in the last 18 months. And then at the other end of the spectrum, we partner with the digital giants. So the likes of Apple Pay, Samsung Pay, Android Pay, those services are running on the payment network rails. So we partner across that full spectrum.
So you're taking the collaborative route then from MasterCard. I know that Nuvora, Avtar, you're the same type of mentality. You believe that not in complete disruption, but actually working with existing financial institutions to improve their service offerings. So you've developed a digital platform for deal execution and asset servicing.
Yeah.
Can you tell us a bit more about what you're doing? And also, to ask that question, do you believe that big financial firms can actually innovate within their four walls, or do they really need that injection of fresh, innovative ideas and talent to make it work for them?
Yeah, sure. So, I mean, I come from a unique perspective because I spent the last 13 years as a quant in large firms. So I've worked internally in investment banks as a consultant. So, you know, I gained a lot of experience around the complexities around processes and around the technology and the methodologies used. So I think when some startups come into financial services and they think they can totally be the Uber of this or that, I think that's probably a naive approach to take, especially in investment banking. Probably there's some spaces in the retail space that could work, but investment banking is a very complex, very intensive in terms of the workload required. So the approach that we took, I mean, I was a specialist in fixed income derivatives, etc. So we focused on a very specific area, and we said, like, debt financing is an interesting space. And the London Stock Exchange, even about 5-6 years ago, they tried to open up like debt financing for SMEs, and they couldn't scale that business. And within 3 years, they found probably like 2 or 3 companies, SMEs, actually utilize their service. And they highlighted that there's a huge amount of upfront cost and complexity in like issuing debt, bonds. So even though they provided this service, you know, it wasn't being taken up by small firms or medium firms. So what we've actually created is a technology that can help structure and execute these kinds of issuances, but we didn't stop there. We've tried to create the end-to-end system that can do the whole thing. And we're not trying to offer this to SMEs or corporates as an investment bank. We're trying to provide this as a service to investment banks, to exchanges, so they can offer it to their clients. And we're offering it in a very unique way. We're not saying, okay, here's a technology, you can go and use it, or you can outsource your technology to us. We're actually taking a very unique approach. We're becoming MiFID approved, so we're going to be regulated like an arranger for deals. But we're also we're gaining a cash permission to actually hold client assets, hold client money. So we're taking an approach where we are going to be regulated fully end-to-end to actually do this as an independent. But then some people ask us, why are we partnering then with an investment bank? Because everything I've just talked about is all the back office operations, how we're structuring the deals, how we're managing the deals, how we're holding them and administrating them. But essentially, the upfront cost of all the sales and the syndication and the origination, that's a huge amount of cost, and that's also quite expensive. We're not in the market to develop a front office. We're there to provide a regulated service so investment banks can do what they do, use the deal flow, plug into us, and we can do all the nuts and bolts behind it. And that's essentially the approach that we're taking, a very regulated, very controlled, but very sophisticated technology that we're using in this end-to-end.
So if you can lower operational costs, how much is this market worth?
So we're focusing on a very specific area, as I said at the moment. You know, the whole SME like debt financing is about 3 trillion, but we're not going into that area, into the whole thing. We're focusing on a very specific, like the loans, the bank financing. So at the moment, the debt financing for SMEs is purely like bank loans. And that's worth about 60 billion per year, according to the Bank of England. So we want to help like diversify that source of funding. So rather than SMEs depending on bank financing, this could be an alternative, potentially.
Thank you. Chris, your business model completely disrupts the whole concept of how we create currency. You believe that people should create their own currency. In your very unique business model. Perhaps you could elaborate a bit more about that. And also, I want to ask the question, why you think this is going to work. Because a lot of fintech plays, they see a gap in the market, like, right, I'm going to specialize, and this is what we're going to offer the customers. So they already have customers lining up for their service. But this vision, for me, is so unique. I just want for you to tell us a bit about it, but why you think we're ready for this vision.
Yeah, so we saw a lot of challenger banks popping up in the market, right? So we heard from Anne Boden with Starling, which is probably pushing the level of awesomeness that you can do within the boundaries of financial regulation. And we saw a lot of these challenger banks doing these kind of things, but what we realised is that there are these rules, right? Banks define what money is, banks create money, banks hold money. Those are like the 3 fundamental rules of banking. If you put them into axes of a cube, that's a box. And 99% of the fintech startups are operating that box, where they're letting banks do that, defining money, creating money, holding money, and they're just optimizing the movement of money. What we realized is you can break outside of that box and actually give those 3 powers or those privileges to customers. So in Seco, we're giving everyone the ability to define their own money, to create their own money, and to hold their own money. So in Seco, we've got this vision where wealth is the contents of your character, not the size of their wallet. So right now, like in banking, you go to a bank and they say, how much money have you got? How much is your house worth? They total it up in a spreadsheet and go, that's how much you're worth as a person, right? But that's wrong, because in the real world, your wealth, your value is like your knowledge, your experience, your education, your connections, all these kind of things build up who you are as a person. So it's actually your character. So what we've done is create a system where reputation becomes wealth. And allowing people to issue their own personal currencies backed by your personal reputation as collateral. So I'll give an example, we'll probably make it a bit more real, right? So like out there, you're all networking, right? You're all giving each other business cards. Like in our world, business cards just like a banknote for data. You create some business cards, you print these things, you add some data items, which adds to its value. But really, every business card is not worth the same. It's worth the reputation of the issuer. So in our world, you don't say, give somebody a business card with your email address on it and give them permission to send you perpetual emails. You can tokenize your data items like an email address. So you can create a coin, and that coin gives someone permission to send you 1 email. And you could give that coin to somebody, or you could sell that coin, because a lot of people want to send you emails. A lot of people want to get your attention, like marketeers and advertising people, that kind of stuff. So instantly you could, in Seco, have your email coin earning revenue for you, right? People want to pay to contact you. Your data's worth money. People are paying Google and Facebook good money to get access to your data. So in Seco, deposit your data into your account and start earning interest on how interesting you are, not how much money you have.
So you're creating a real-world social network where people can barter for digital and real goods. So you'd be working with retailers, not with financial institutions.
So it's actually both, because what we realised is that retailers also create a lot of currencies themselves, right? So you've got coupons and vouchers and air miles and discounts, all these kind of things are currencies from retailers and corporations, but actually we want people to be able to create their own currency. So a piece of your time, piece of your knowledge, piece of your data, these could be currencies as well, and we'd like that ecosystem to operate through state-backed fiat currencies, corporate currencies, and personal currencies. And we wrap that ecosystem up into an app, and the app's called Aura, and the Aura looks a lot like Pokemon Go, if you ever played that. It's kind of a proximity-based location networking app. So instead of scanning the area and finding Pokemon and catching them, you scan the area, find other people, and you trade with them based on the metadata that they're broadcasting.
And which community or demographic are you targeting for this app?
So right now we're looking at the fashion industry. Quite interesting, because we're looking at, in terms of reputational economic system, people, young fashionistas care a lot about their reputation and image. So these people already deal in non-monetary units in terms of like discounts and coupons and vouchers. They already care a lot about their facade, their personal data, their reputation. Mm-hmm. There's already fashionistas make a lot of money out of their personal reputation on sites like Instagram, for example. So it's actually a real fertile ground. So I guess if you look at what we're doing, we're sort of taking the best blockchain tech from fintech, applying that to the fashion industry, using ad tech as our business model, right? So, and London just happens to be the capital of awesomeness for fintech, ad tech, and fashion tech. So it's like a perfect storm. So
can you give me an example of how it would work? Let's say I download your app, and I'm a fashionista, which I'm not. But if I was a fashionista, how would I use this app? Because it seems so abstract still, I think. For
so you'd have it. So you'd have the app that broadcasts an interface to 100 yards around you, and you get to define what that interface is. So that interface could be: here's the outfit I'm wearing. here's where I got it from, here's who designed it, I can certify that it's sustainably sourced and no child labour and all that kind of stuff. And you can broadcast that stuff. And in fact, the outfit you buy, like the boots you're wearing, somebody could have given you a coupon when you bought that and said, broadcast this. And if anybody else sees the boots on you and says, oh, I love those boots, I want to buy those boots, they can go to buy those boots, having seen it on you. And you will therefore get a referral bonus if somebody buys it off you. So what's happening there is that your boots are now paying for themselves because whenever anybody sees it on you, they buy them off you. And then what's happening now is the retail store, boots.com or Boots Shop, they have a new sales channel. And that sales channel is every one of their customers is now a walking mannequin for their personal brand. So you're a brand advocate and you're a sales channel for them. And the person who sees it on the person, they're getting a discount voucher, retail store gets a new sales channel, person gets referral bonuses. It's a three-way win-win-win situation. Yeah. So we realised that actually people in fashion, they put a lot of effort into dressing themselves. Clothes aren't a utility. It's all about image and brand and what they want to project about themselves. So we're giving them that ability to digitally augment their physical self, to kind of broadcast an additional layer of metadata about them, to digitally dress themselves every day, right? It's not Internet of Things, it's kind of Internet of People.
Yeah, so you're almost being rewarded for taking part in the social network, which is quite interesting.
Yeah, what we realised is all social networks obviously have a critical mass issue, right? It's no point having a social network if no one's on it. It's like going into a nightclub and it's totally empty. You need a lot of people on there very rapidly. So we realised that we needed a feedback loop where people get in there, they realise it's highly engaging. There's a feedback loop where the more data you deposit into this thing, the more richer the experience. Because nobody wants to download an app and get a 300-question data item that they have to populate. They want to start off very easily and start realising that the more data you deposit, the more interest you're going to get on how interesting you are. Just like in a bank, the more money you put in there, the more interest you're going to earn.
Yeah, it's really interesting because there's so many apps out there, and I'm always fascinated about which ones actually work, and so many of them don't. Which brings me to my next question, actually, for MasterCard. You've been one of the most forward-thinking payments companies in the world, and you've recently enjoyed great success with your Quicker app. I was mispronouncing it until you corrected me. I was calling it the QKR app. For those who go to chains like Wagamama's, Ask, and I think Byron's as well now, or soon to be Byron's, you can actually pay with this app. You don't have to wait for the waiter or waitress to actually come with your bill and your payment. So it's very quick, seamless, easy to use. I'm a regular user of Quicker app. I want you to tell us how you knew the time was right to launch this solution, how it was developed, and why you think it's been such a success.
Yeah, great question. If I knew how to make every app successful, then I'd be here floating my next unicorn, I think, rather than sitting here. But yeah, I can certainly share what we learned on Quicker. So as you say, it's a pay-at-table app, particularly for casual dining. So we're live at Wagamama, Zzz's, Carluccio's, Byron's, TGI's, Young's Pub. So we're due to have 1,000 restaurants live by the end of the year. The way it came about was Wagamama actually approached us through a LinkedIn contact. So it wasn't something that we were out there trying to sell. We had a real client with a real need. So we met them. We spent a lot of time understanding what they were trying to solve with a digital solution. And their pain point was the average time you spend in a Wagamama is 40 minutes for your meal. But the industry average from the time you want your bill to the time that you actually manage to get the waitress, get the POS, share the bill, do the card transaction and leave, that's 12 minutes. So 12 minutes out of 40 minutes is quite a big chunk of time. And if they could streamline that, then they're going to firstly improve the customer experience, but also increase sales by getting customers through the door much quicker, which for peak times with somewhere like Wagamama, if you've been there, you'll know is absolutely key. So we spent time with them and with our labs to develop what this pay-at-table app would look like, and really making sure that it fitted Wagamama's unique restaurant environment. And I think, and the sort of learnings that we had in terms of making it successful, one, Wagamama was a great collaborative partner for us. This was a new thing that we did, And anytime you do anything new, there's going to be problems, there's going to be things that you do wrong, and having that collaborative partner to work through those challenges with you, absolutely key, not walk away as soon as things get tough. I think meeting that real need for them, but also their consumers. We've all been there trying to get out of that restaurant, whether you've got screaming kids or you're late for a business meeting or whatever it is, and trying to flag that waitress down who's dealing with, a huge table. So being able to cut that point out and just pay and leave when you want to as a consumer. So real consumer pain point. Also, we spent a lot of time making sure that the waiting staff, so those people who are interacting with the consumers, really understood this, and it was really going to improve their lives. So one of the metrics we measured during the pilot process was impact on tips. Because if this was going to decrease their tips, this thing was dead in the water, because there was no way they were going to be talking about this. But we saw an increase, and we made sure they knew that there was an increase, so that they were really behind it as well. So yeah, and one of the things we were talking about earlier was about that, what segments do these kind of things appeal to, and the young tech savvy kind of people, of course, that's sort of a great target for us. But one of the things we've seen with this and some of the other digital solutions we've launched is actually it's the sort of busy parents, the busy mums particularly, who are really looking for these kind of practical tools which just make their lives easier. And they're the ones sitting there when the kids are just about to kick off, that kind of tipping point when you just know they're going to get fractious. They're the ones who need to bundle the family out of the restaurant as soon as possible. So they soon latched on to this was something that was going to help them over that moment.
Yeah, that's a very good point, actually. Women download more apps than men do, but people designing the apps generally are men. And every conference that I've done where we've discussed apps is usually full of men in the audience. Women are at home downloading apps probably, but it's an interesting point, definitely. I've downloaded the app, my husband hasn't, so there you go. I want to talk a bit about sort of the challenges to innovation. So I think you're in a very unique, fantastic position because obviously MasterCard has the money to innovate. You've got a great team in-house, you collaborate, and also just being able to have someone like Wagamama's come to you is a testimony to your strong brand and you're trusted, and it makes things a lot easier for you to innovate. I don't think that's the same for the fintech startups. So I want to ask you, Avtar, what do you think is one of the biggest challenges for you in terms of innovation?
So, from our perspective, I think that definitely the regulation was a challenge. However, we're turning it into our competitive advantage, partly because getting through all the MiFID and CAS approvals and all the controls that we had to implement, it was very challenging, it was very hard.